So we're going to ask who's this really for? Well, ultimately, it's going to be for your high net worth and ultra high net worth clients. Sorry about that. And it's really going to be because they're the ones that are going to have estates that are over these exemption values. Your typical family couple that has a couple Honda Accords in the driveway, a $300,000 house, and maybe has a boat. They're well under the estate tax exemptions. They don't need a survivorship in order to pay for those taxes. So this is really for the clients that really have those assets that really need to be protecting and have that evaluation that is much larger than what those exemptions are. It's also going to be for business owners. So as we showed before, it's a good way to allow for business owners to be able to equalize their share of the business when they pass with their heirs. I will note here that most survivorships are going to be sold on a husband-wife, a married partner type estate, but it doesn't have to be. You can have two business owners own a survivorship. There has to be that insurable interest, and that does make sense for a lot of business owners to say, okay, well, the business really needs to find a way to move on, to pay out once both these people pass, as opposed to either one. And ultimately, it's going to be for someone that values legacy and the protection of their heirs. They're the ones that want to have a name for themselves after to kind of live on. You want the clients that don't want to have to worry that the family home or farm or business has to be sold in order for the tax bill to be paid, or for everyone to get their equal share. So those clients that are really valuing that legacy and the ease of their heirs to continue in that legacy are going to be those clients that we're looking for. So when you're talking to clients, these are some of those key words that you're going to want to listen for in your conversations. And it's really going to be, once again, around that need for either avoiding the taxes, preserving the legacy, talking about how to, protect their estate. If they have large indivisible assets that they want to protect and want to keep within the family, as opposed to being sold off. And one thing that I'll note is that when the tax man comes, if something is not in place, you may have to sell assets on pennies to the dollar in order to pay that tax bill, because your timeline to sell them is reduced. So really, this is to protect the true value of that estate that they're leaving on, versus what that estate liability will be for that next generation. And you're going to hear some common objections. I'll just buy for myself. This is the one that I think you'll hear the most of. Okay, I'll just buy that $10 million policy on myself. As we already saw, allowing that to be a joint policy does make it so that the actual premium for them will be lower. But there's another thing to consider here that I think is sometimes lost. Husband and wife have a $10 million policy each. Husband passes, the $10 million gets paid to the wife. Guess what? She now has $10 million more in her estate. Sure, she got that benefit tax-free, but now when she passes, that's now a bottom line number in her estate that her heirs are going to have to pay tax on. So although the transfer of wealth between married partners may be an unlimited exception, the fact that once that death benefit is paid and now becomes part of the estate is a good reason to position a survivorship versus just buying for yourself, because you're hoping you're the one that outlives your partner. Another thing that people are going to say is that I'm going to be under the tax exemption. Great. For someone, like I said, that may have, that $300,000 house, have, two, mid-sized family vehicles, that might be true. But for anybody who's growing and building their net worth, while that may be true today, you need to talk to these clients about, well, what do you think the valuation of your estate is going to be 20 years from now? You're showing that you've grown this much over the past 10 years. What's your estate going to be valued in 10 years from now, 20 years from now? Are you still going to be under these exceptions? What if the exceptions drop lower? What if your estate outpaces inflation, which you would hope that it would? And you really want to talk to them about the fact that even though they may not have a need for it with their current evaluation now, if they're close to those markers, this is a future conversation of protecting their future selves. And the best part is it's still a life insurance product. If they don't have any estate tax needs, guess what? The heirs now have that full death benefit paid to them without the need to pay that tax if they are under those estate tax exemptions. You're going to hear another one, I'm uninsurable. Great. One of the best things about survivorship policies is the fact that for a lot of these policies, in fact, most of the ones that I'm aware of, you can have one uninsurable on the policy as long as the other one has insured. I've actually seen some cases written through a carrier that I used to work for that had an insurable and someone at a table 6. Now that premium was a little much, but they were able to still capture protection while including both of them in that survivorship policy. So the fact that one may not be able to kind of pass the underwriting muster, you can still position them in a survivorship product as long as one of the two parties is going to be insurable. The next one is, what will I leave for my partner? So part of this goes back to that I'm going to pay my partner the $10 million and then they're going to pay the taxes after. It's really about the discussion of what is it that we need for that next generation, and these are going to be clients that are not necessarily worried about their partner being taken care of once they pass because they have other assets. And that's really where, as a financial professional, you're going to have to know what other assets that they can lean on above and beyond survivorship in order to do that. But another good thing about life insurance, you can have more than one policy. So I have seen cases written where there is a survivorship for the estate, but the estate does include individual policies on both people on the survivorship. And so, as we said before, that 10 million now gets added to the estate when it's passed on. That's accounted for in their evaluation and what they perceive to be the tax need that's going to be covered by the survivorship. So it's not you have to choose one or the other. The survivorship is really about that generational transfer, not necessarily that partner to partner. And then the last thing is, my children will just sell the assets. Great, but when you have that tax bill, you're not going to get the full valuation of the assets that you may think. And that's something that is going to be a hard pill to swallow for a lot of clients. They have their house that they have, it's a $15 million property. If you look through a lot of listings, how many listings do you see that are multi-million that have been sitting there for years? And if the heirs can't sell that within a reasonable time at the full value of the property, they're going to be taxed at the full value because it's part of the estate, but they're going to have to sell it for, like I said, pennies on the dollar in order to pay that tax bill, and now they've just lost wealth. So it's really a talk about that preservation that we talked about, and that ability for them to think, okay, great, they may have some assets that can be convertible to cash, if you have, stocks, bonds, and other, but for some of those other intangible or harder assets, you're not able to as quickly turn those around in a manner that you're going to get that full evaluation that you're being taxed on. So it's really something to think about of, sure, your children can just sell the assets, but is that even going to give them enough for what they need to cover? So I know that was a lot to talk about. I've been talking for the past 25 minutes or so. I'm going to leave it now for any questions. As I said, these are some more complex cases, and we here at Penny are happy to help. If you have one of these, help you through the underwriting process, help you pick out a design, help you kind of talk through some clients' needs and scenarios as they come up. We are definitely happy to help assist with that. But you're going to want to make sure that for a lot of these, there is a tax professional involved. If there's any types of trust that need to be set up, you do have trust lawyers, same with the buy-sell. So just note that for a lot of these, it's not going to be someone walks into your office and then you sign an application the next day. These are going to be some longer sales, but I do think that they are some worthwhile sales. And if you're lucky enough to find these, they can definitely generate some huge potential for yourself and your agencies.